Good morning and welcome to Join the Dots. I'm going to rush through the rest of Mike Maloney's piece that I sent you yesterday, and I'll link it again today so that you can follow it easily. But I'm going to rush through it. There's so much in it, but we haven't got that long, have we? So let's go. So they really talk about inflation and the lie that is inflation. The CPI Lie, they call it. We all know it's a lie. Anyone who buys food knows it's a lie. Okay? It may apply to the very rich because they don't spend an awful lot of their income each month. So, and these are the people who create the CPI, of course. The real function of keeping the CPI low, though, is because of inflation-adjusted pension and social security payments. It's not difficult to see if you open your mind. The government has to keep changing the formula to keep its commitments from absolutely ballooning in terms of future pension and social security. So it has to keep the CPI as a CPI Lie, doesn't it? And because of that, if you actually inflation adjust for proper inflation, calculated on the 1980 basis, using shadowstats, John Williams, I've mentioned him many times, gold would today, matching its peak of 1980, which we know was a false peak, I've explained that to you, would be $34,000 an ounce. 34,000, I'm not joking, adjusted for the proper inflation. Then you've got to add all those extra people that have come into the market, and you've got to add all that extra money that's now available to buy gold, which we didn't have in the 1980s. I told you about those yesterday. So the question a lot of people ask me, and the question I see on my site is it too late? No. No, this is early because the numbers are just unbelievable, and that's the point, they're unbelievable, so a lot of people won't believe them. Okay, so we look at silver and we again adjust that for the CPI Lie. Silver, if it was at a 1980 high now, it would be $200. Now we know that silver lost a lot of its usage in photography and things in the 80s, 90s as we went all electronic with our mobile phones, etc. However, it's now got a new market, hasn't it? Massive new market in missiles, EVs, solar panels. So we know there's a structural shortage of 200 million ounces per year, 20% per year. And we know that's been the case for 4 years. So we know someone somewhere is playing with this price because it really should be just adjusted on 1980 figures, although we know those were inflated by Bunker Hunt and we know they're not true. But if we adjust it for those figures, it should be 200. If we adjust it for shadowstats figures, it should be 2,000. Like gold should be 34,000. This is the reality. So when you worry, when simple explanations like, oh, it's an all-time high, says Bloomberg. Oh, it's an all-time high, says the FT. Oh, it's an all-time high, says the Wall Street Journal. They're trying to stop you from getting involved. They really are. I don't say it's a plan, but that's the effect. Okay, so we know, and I've explained to you in so many of these presentations, we know that the bond market determines everything. It is not the equity market. The equity market will follow the bond market wherever it goes. And we know we've had a 40-year bull market on bonds and we've had the same in equities essentially. But now it's finished, okay? And so we're teetering on the edge of a 1929 crash. I've told you before, China is absolutely imploding. I don't care what they publish, I don't care what you read, it's imploding. No one, even my friend Tony at China Update, no one is talking about the 17 trillion of debt issued by local government investment vehicles. Local government investment vehicles have one charter really from the centre. They have to impress them. They have to impress the centre. So they build trains that go ever so fast. They build buildings that look wonderful. They build roads to nowhere and bridges over fantastic gorges and canyons. But how do they get repaid? Is that economically beneficial? No, it's all pride, it's all arrogance, it's all to impress the centre. Okay? Now they can't pay it back because all they had in their forecasts for repayment of all these loans issued for all these wonderful things that make the country look absolutely fantastic is property sales, land sales, and they can't sell anymore. Evergrande is now completely bust, gone, deceased, is no more, gone to meet its maker. And BYD could be on the same path. Might survive, might not. I'd bet against it 60-40. Okay, and people would have said the same about Evergrande. Oh, you can't say that. They'd have said the same about Evergrande, wouldn't they? It's a false economy. So we're teetering the world, not just China, the world, and we can see it in America, we can see it in Europe, we can see it in the UK, we can see it in Canada. Australians, it's being hidden a bit at the moment, but again, as Chinese manufacturing, production, construction fails, what is Australia's export market? Okay, so we're teetering on the edge. The whole world is teetering on the edge of an economic collapse, a 1929 moment. And there's only one way to stop that, isn't there? And that's to print. And what does that do? What does that do to gold? What does it do to silver? What does it do to inflation? What does it do to the economy? It cripples the middle class. Because we go into a period here where John and the guy talking to him, and I'm sorry, I think his name's Alan, but those two explain very, very clearly in this presentation real inflation versus fake inflation. Fake inflation is like 110,000 at Unite Britain. 110,000. That's fake inflation. Real inflation is 500 to 800,000, isn't it? It's the same. Everything's the same. It's a lie by the authorities in every direction. They need to keep CPI down because they must keep the commitments to the future of pensions and social security under control. And they can't, even though they're lying. They can't keep it under control. So we're going to have an explosion, aren't we? We're going to have a moment. And both Eurodollar University and Greg Mannarino have been saying this for months. Greg's been saying it for years. Eurodollar's been saying it for months. The bond market is screaming chaos ahead. Okay? And obviously we've been told, or we are being led down the path that crypto will save us, stable coins will save us. Don't get Greg Mannarino started on that, because this is, in his view, and I accept it, it is worse than a central bank digital currency. America has done everything to avoid having a central bank digital currency, which is Europe's plan. Okay? But it's worse because this coin, these stable coins are being issued by banks. So banks have control. And who controls the banks? The Fed, not the government. So who controls the economy? The Fed, not the government. It's a simple path of joining those dots. Okay? So we've seen negative interest rates for years now in real terms, because if you look at the real inflation versus the interest rate being charged, if inflation's 11 and the interest rate's 4.25 to 4.5, although it came down a quarter yesterday, as I predicted, said it wouldn't be a half, said it'd be a quarter, okay, you've got a 7% negative real interest rate. 7% negative. Wow. Now look at the chart that John shows you, okay? I think it's after about 10 minutes of the presentation. 10 to 15 minutes, long discussion as well, on the effect of negative real interest rates and what it does to the gold market. Look at the history. Every time they go negative real interest rates, gold booms. It booms. We've only just started, or we've only just begun. I think it was a Carpenter's song. Okay, so everything is screaming that gold and silver are massively undervalued. Then we come to how many more times money is it in the system? 55. How many more people are able to buy gold and silver? 18. How many central banks are buying gold and silver? All the East. Do the East trust dollar? No. Kenneth Rogoff, very good piece, and I'm trying to re-find it because I've lost it. I'm trying to re-find it to link. I will try very hard to find it. Kenneth Rogoff used to be the chief economist at the IMF, I believe. And what he sees now is countries are seeking protection from the dollar, not through the dollar, and we know that. China, India, Russia, Iran, Turkey, Venezuela, every country in the Eastern Bloc, the new BRICS plus group that China is trying to put together to rescue China's economy, if truth be told. But they're putting it together, but how many treasuries are they still sitting on? Hundreds of billions. They've yet got to offload those and replace it with gold and silver if they want to protect themselves from the dollar. not with the dollar. So Kenneth Rogoff goes on a good piece on this, and he talks about Bitcoin as well. Now this will interest a lot of people who are into crypto and want to know about Bitcoin. I have a very different view to most people on Bitcoin. I think it will be outlawed by the West in the end. Now Rogoff points out that 25% of the world economy is a black economy. In other words, it's not understood or accounted for in terms of taxation, reporting, etc. 25%. That's likely to grow, isn't it? And that attracts Bitcoin, because that's what Bitcoin funds, the black economy. People doing deals that no one can see. That's the beauty, that's the attraction of Bitcoin. So how many Western authorities are going to allow Bitcoin to exist if it's a deliberate way of avoiding taxation, accountability, any justice in their eyes, And that's why I see Bitcoin as not having an asymmetric risk like gold and silver do. I think it has a very clear risk reward. And I think the risk could almost be total at some point. Not now, but at some point. The Chinese crisis is here. Okay, we know that. Rogoff says the China crisis is here. He says the government owns everything. And as I've said before in one of my answers to a comment, I think China has encouraged the population to buy gold and silver because it can actually take it off them at some point if it needs to. And think of those $17 trillion of debt held at the local government vehicle level. Think about it, because no one else is. No one else is talking about it. No one else is thinking about it. It's just a fact. Look it up. Put local government investment vehicle debt in China in your Google. Find out. Okay, and he thinks that the Chinese will be lucky to get out at 50% of the rate of Japan's complete collapse after '89. We saw the Nikkei fall from 39,000 to, I think, 14. Over 30 years. 30 years, not a V shape, is it? Not a recovery. 30 years it took. Okay? So we see an awful lot of reasons why gold and silver will go up. Now, the only thing I can counter with in terms of what could hurt it would be the recycling of past gold and silver. In other words, people will start selling their watches, their jewellery, their clocks. They will. They'll start selling those. It happened in 2008. I remember it. So there will be some recycling of gold, but the numbers, 55 times, 18 times, the numbers are just monumental. The real inflation level, the negative real interest rate level, everything is far bigger. The fear of the dollar, the fear of having their bonds taken by the US government, it's so much bigger than some recycling of gold, okay? Or new deposits or whatever. So demand supply is in our favour. Anyway, I'm going to come back to you tomorrow with another gold silver special. This is so important because if I can put these three together, and remember Miles Harris' piece, it's brilliant, and he's put another piece out and I'll link that tomorrow. And I've got another excellent presenter tomorrow. Calm, methodical, practical, factual. Okay? Thank you very much.